Welcome back to another episode of On the Market, powered by Modex. My name is Kenny Owens. I lead the sales, marketing, and partners team for Modex, and I'm thrilled to be joined today by Thuan Nguyen. Thuan, thank you for joining.
Thank you, Kenny, for having me.
Another incredible top-performing loan officer based out of the state of California. Thuan, what an incredible year. Trailing 12 months, $531 million in loan production, over 1,524 units. 53% of that business being purchase business over the last 12 months across 43 states. That's an incredible 2022 in the middle of a disrupted market. Congratulations.
Thank you. That is probably 20% of the previous year, but I'm happy with that production.
Yeah, absolutely. It's a big shift, right? We looked through the historical data. We can see going back to 2021, your business primarily being refinanced with the rates down in the 2s and 3%. Obviously, that makes a lot of sense. Very high volume there, but 95% of your business being based on refinance. And then a big shift in 2022 as rates go up, then kind of diversifying and kind of bringing more of a balance to be able to, in 1 year, shift from being very heavily refinance focused to being able to incorporate purchase to 54% purchase is incredible. That's an incredible feat that most loan officers will work towards their entire career without achieving. So congratulations there.
Thank you. Thank you. It's a lot of work. You know that the last year, we all have to work even harder than the previous year, even though our volume is a lot less, but we have to work so hard to win a deal, to close a transaction. So business was tough last year.
So there's not a single loan officer that will be listening to this that won't question how you were able to go from 5% of your business being purchased to 54%, right? It becoming the new kind of primary focus. Obviously, the rates have to do with that, but how are you able to go and create essentially this demand for buyers and relationships with real estate agents in such a short time period with these dramatic results?
Yeah, very good question. In the previous year, 2021, I basically don't work with realtor at all. No realtor. We have no realtor relationship because back then business was plenty. There's so many business, so many borrowers out there with refinance. So, and you know that in order to win a purchase transaction, there's so much work involved. For refinance, it's so much easier. So I pick an easy path, working on refinance so that I can close more transactions, spend less time on it, and collect the same amount of money. But last year was a different year. When rate jumped more than 2%, hit 6%, almost 7%, all of the refinance disappeared. I have no choice but working focus on purchase. I had no choice. So it was a big it's a big task for me. From previous year, I never worked with realtor, and I have to switch it 180-degree, focus on realtor relationship, building purchase business. It was not easy at all. Especially, it's not me that building the relationship. I mean, the company is getting so big. How do I myself, go out there, spend so much time building the relationship with realtor? And we are not talking about 1 or 2 or 3 relationships. It's a lot of relationships in order to have enough purchase transaction. And even last year, a lot of realtors are suffering too. Their production also come down. Everything slowed down last year. So it was not an easy period, but we were able to, we can say that survive that, the last few months, every single company are basically in the survive mode.
Sure.
That's all we ask for, waiting for a better time for the market to return to a normal period. So I think right now market is getting warm up a little bit, return to more like a normal period already. My production already went up. Yes.
Yeah, your name has been a staple in this industry for a long time. As you mentioned, 2021, 2.4 billion in loan volume. So we've seen you at the top of the charts. We're highly focused on loan production data at Modex, and you're always up at the top of that chart there. But still, even in a disrupted market, $541 million across this many units, 1,500 units, is still a really impressive feat. And to be able to make that kind of recognize, okay, if I want to stay in this industry, I got to make these pivots and change my approach. So it's just fascinating. So, Thuan, like I mentioned, a lot of people are familiar with your name and your production and kind of the impact you've had on the industry. A lot of folks are not aware that you actually come from a technology background. I'd love to kind of hear a little bit about that background and how that kind of got you into focusing on the mortgage industry and how you leverage that technology to differentiate yourself today.
Yeah, I was lucky that my background was technology, and I live here in the Silicon Valley, where my friends are working for the startup company, technology company. So I know the importance of having good system, good process, good technology. So it was like back when you go back 10 years ago, when everyone's still using Calyx. And I got frustrated because my production keep increasing, and Calyx cannot handle my production volume. So I end up asking a friend to build a software for me. Initially, it's starting out at the simple like worksheet, allow me to track the status and what's going on. But been here in the Silicon Valley and having so many friends that they're good with technology. So I decided to grow it, to have my own proprietary technology, a separate platform that just a little bit about me that many people don't even know. We have our own proprietary technology that allow us to do basically anything. This make Loan Factory and me separate from the rest, from everyone else. We have our own technology. We don't use any other software out there for our production, for our marketing. We use just Loan Factory, our own software. And that is the biggest weapon. This is the biggest tool that allow me to be so successful. And that is the only thing that makes me better than everyone else. Otherwise, without the technology, I would be a normal loan originator, just like everyone else. So my point here is to share with everyone, to let everyone know how important it is to have good technology to work with. It will help you, it help your production, it help make sure your client are more happy, make sure your staff, your loan officer are more happy, and you have a better time closing your loan.
Yeah, using kind of technology stack to drive efficiency allows you to scale to the level that you have 43 states and being able to make these shifts within your business. Certainly, if you were still using legacy-minded tools, probably not, you wouldn't have the time or the efficiencies built into your business to make those adjustments on the fly. And we're seeing that across the industry, whether it's machine learning and AI, predictive analytics, being able to leverage those technologies to understand where the trends are and then to make adjustments to your business model in order to capitalize on those insights that are very hard to track if you're doing it through, again, legacy or manual processes.
Correct.
It's incredible. So a whirlwind of a year, obviously, leading up to through 2021, very heavily refinanced. Then you've made this shift to building out your purchase business with real estate agents, and another amazing year. What does 2023 look like? What are you anticipating from a change perspective? As maybe you mentioned rates, kind of coming back down a little bit. You're already starting to see your loan volume and refinance pick back up a little bit. What are you anticipating for the rest of 2023 and moving forward through the end of the year?
The market for sure will return to close to normal. Probably not back to normal yet, but I would believe that it will slowly get back to normal. And even the year after 2024, the market might hit up as well. So people got shocked with the rate jump. So they got shocked. and with the inflation, with everything. But then after more probably another 6 months to a year, everything will accept higher inflation. Everyone will accept higher interest rate, and everyone will start buying again. And we will see that people will refinance. They don't care if rate is 6% or 7%. They don't care. They accept that because inflation is high. The money is losing value. So people will become normal. They are willing to refinance. If they need the money, they will cash out. So the whole market will return to normal. But right now it's still a little bit slower than normal. And I think right now is the good opportunity for everyone to prepare for the future. Everyone should start learning, start improving not only yourself, your knowledge, your guidelines, but also how you talk to the clients, how your marketing, your system, your process. You need to keep improve constantly, because out there everything moving so fast. Like you said, AI technology, everything moving so fast. The competitions only heat up. So if you not working hard, if you don't try to get better, then you will fall behind. So constantly working hard to improve. That is the best way to prepare for the future. As for Loan Factory, we have we changed our direction again. We keep changing our direction. Whatever works best, we will adopt it. So the new direction for Loan Factory is we are becoming a mortgage platform with all the technology, the process, and everything we have. We want to become a technology company. We want to become a mortgage platform where all the loan officers out there can join, and they can be successful. Everything will be taken care of, except one thing. The loan officer need to go out there and originate, go out there and do marketing and bring in the business. Everything else we take care for them. So that is our new model. And I don't think there's any such a platform like this right now out there. So we are pretty excited right now.
Yeah, going back to the first question and kind of your background in getting into the industry, right? There was this need of the current platforms were frustrating and were holding you back from producing the way that you would. I know that there's a lot of loan officers today that are listening to this that will relate to that, right? That if I could just spend more time originating loans and speaking to my borrowers and going out and meeting with real estate agents and so on, I could focus on building my business. Instead, I'm spending a lot of time in tools that are broken and backwards and frustrating. How can, like, what is the best way for a loan officer to reach out to you today to learn more about Loan Factory, to learn more about the advantages of your platform, and to potentially see about being able to leverage that within their own business?
So in the last 2-3 weeks, we've been focusing on the effort of educating the loan officers, even small broker or even retail loan officers, that maybe it is. We even use the new slogan: "Broker are not better." Everyone talk about broker are better. I'm saying broker might not better, because as a small broker, there's hundreds of things you have to worry about, from compliance, from licensing, from auditing, from training, from all kind of overhead, all kind of software you have to deal with. There's so many things you have to worry. And if you are a tiny company with 2 or 3 loan originators, there's no point. There's no point of spending so much time every day focus on those things.
Right.
You just need to focus on what you do best, which is originating, which is helping your clients. And that is our message to all loan officers out there, even brokers out there. We need to learn, we need to focus what we do best. And the best way to reach out to me, very easy. Go to loanfactory.com, check out what we have, check out who we are, check out the technology that we have. And then right from there, you can reach out to me. It's very easy, loanfactory.com.
Okay. And Loan Factory is growing currently, correct? This is one of the shifts that you were talking about to change and model for this year.
Exactly. We aiming to have like at least 1,000 loan officers by the year end. So we are ambitious. We know the value that we offer the loan officers, and we know that a lot of loan officers will take it, and we join Loan Factory.
Well, your timing's impeccable. We've had an all-time high this year of folks leaving their current organization to try something new and different and maybe differentiated. A lot of folks that are flat out leaving the industry as well. So that creates a lot of opportunity, a lot of open positions. And it's great to see an organization like Loan Factory that continues to grow and thrive in a market that has been through so many adjustments in the last 12 months. So again, Thuan, thank you so much for being on with us. This is a lot of great insight and valuable content, and I'm pretty confident that you're going to receive some responses through loanfactory.com as well with interested LOs. But again, thank you so much for your time and effort in joining us today.
Yeah, I would like to say thank you to you and everyone else watching this video. I really appreciate your time and the effort of having me today so that I can convey my message to everyone else. Hopefully, you can learn something. Hopefully, it will help you grow your business. It's all about sharing and learning, right?
Yeah, we feel the same. All right, guys, thank you again for joining us. We'll see you next time for the next episode of On the Market.